Hey guys, hope you're doing well today. It is Tuesday, August 30th, 2022. And guys, we got a great video to talk about today. We've got two pieces of information that you're gonna wanna tune into. We're talking about inventory decreasing. Yes, I said that correctly, decreasing. And there's a really good reason why as well. And then we're gonna talk about what our good friend Jerome Powell said out in Jackson Hole, Wyoming last Friday. And boy, did he ever rock the markets on Friday. So you're gonna wanna stay tuned to what we gotta talk about, and we're gonna get this one cranked up right now. Hey guys, welcome back to the channel. If we have not met yet, my name is Brian Taylor and I'm the owner of Dreamline Realty, and I appreciate you tuning into my video. If you are a returning viewer, thank you for coming back. And thank you for supporting my channel. Now for you new people out there, please consider subscribing to my channel, and here is why. Guys, we are in some seriously wacky times, and I'm here to tell you, I'm just gonna rip the Band-Aid off right now. Things are gonna get rocky for a while. And you're gonna wanna stay connected to my channel because I put new videos out at least twice a week. We talk about what's going on in Charlotte. We talk about what's going on in the national real estate market. And guys, it is gonna be a rough road ahead. I'm just gonna say it. I don't have good news for us going forward. But as your captain of the ship here, I am gonna get us through these turbulent times. So make sure you stay connected to the channel. All right, guys, so two articles to talk about. First one I want to share with you is about inventory going down, and that may seem kind of weird because all we're hearing out there is inventory going up. But before I get into this article, I want to show you what I said back in April of this year about what's potentially going to happen down the road as interest rates continue to rise. So check out this clip now. As far as inventory goes, I actually think that we are headed into a season where we could be in a less inventory situation coming up. Now, why do I say that? It's because there are a lot of sellers right now that want to sell and cash in on the equity gains that they have made over the last few years, but they are sitting on a fixed rate at 2.5% or 3%. So there really isn't any incentive for them to sell and have to go find somewhere else to live and buy on the high side, and at the same time, leave their nice low interest rate in exchange for a new rate that is potentially double what they have now. Likely doesn't make sense for a lot of those people to do that unless they really have to sell. All right, guys, so there you have it. That's what I was thinking back in April when I was forward thinking and critically thinking about where this market could potentially be happening. And this article that I found from Redfin talks about just that. So let's get into the article. So the article says, housing market update. More sellers retreat amid falling prices, volatile mortgage rates. Goes on to say, would-be sellers are reluctant to list their homes as they have begun to see prices come down. With few new listings, buyers' newfound bargaining power is reaching its limit, especially now that demand has stabilized, and homeowners who are choosing to list are increasingly pricing to meet buyers where they are. New listings of homes fell 15% in the 4-week ending August 21st, the biggest annual decline since the start of the pandemic, as there were fewer sellers and buyers in the market due to rising mortgage rates and economic uncertainty. As a result, the supply of homes for sale fell 0.6% from the previous 4-week period. That's a slight decline. It's only the second time total supply has dropped from the prior 4-week period since February. The first time was last week. The dearth of homeowners putting their homes up for sale is partly a reaction to a reduced demand and falling prices. But here's where it gets interesting. Sellers are coming to terms with the fact that volatile mortgage rates have dampened demand. Some sellers are pricing lower, and some homeowners are staying put because they're nervous they won't get a good offer, or they're hesitant to give up their low mortgage rate. All right, guys, I'm gonna stop the article there. And this is what we're seeing right here in Charlotte as well. So over the last 3 or 4 weeks ago, we started to see this ramp up of inventory, right? So over the last probably 7 or 10 days as I've been tracking this thing, I'm not seeing as many coming soon listings come to market, and I'm not seeing as many listings day over day than there were the previous weeks. And this is exactly what I think is happening. These sellers are realizing, hey, I've missed my opportunity to sell at the high, and those days are likely gone for a good while. So all these sellers are thinking, why would I ever sell and take a 6% interest rate on the next house I'm gonna buy when I'm sitting pretty right here at 2.5 or 3%. So we're gonna really have to pay attention to this and see where these numbers go, which brings me to this chart that I wanna share with you right here. So this is the chart in the article that talks about inventory being down, new listings being down 15.4% year over year. So let's take a look at the line in red, right? So if you follow along here at the top of the chart, you see the line in red there, peak in July. And as you can see, it's taking a sharp dip down here on August 21st, down 15.4%. But what's interesting here is if you look at the blue line at the same time frame between July and August, that blue line is 2021, the red line is 2022. There's a pretty good gap there, guys. So if this continues to increase at even a 8% or negative 8% or negative 12% month over month or year over year decline in new listings, this red line could essentially fall right straight down, which we don't want to see happen, guys, because that is bad news for you buyers out there, right? You're already struggling with limited inventory, and as less inventory comes on the market, which potentially is going to happen based upon this chart, you're going to have less things to choose from, guys. So I hate to bring the bad news to you buyers, but it looks like we could be trending to some pockets of less inventory. Now, again, keep in mind, this graph is across the nation, right? But we are seeing these things happening right here in Charlotte too. So we just have to make sure that we're very clear about our local market versus the national market. All right, guys, so I want to switch gears now. I want to talk to you guys about what the Fed Chair Jerome Powell said in their annual meeting on Friday in Jackson Hole, Wyoming, guys. And if you haven't heard this, what he said in the 8 minutes that he spoke pretty much rocked the markets. And this is why I'm telling you that we are gonna be in some very tricky times going forward. So the article goes on to say here, it starts off by saying, Powell warns of some pain ahead as the Fed fights to bring down inflation. Federal Reserve Chairman Jerome Powell delivered a stern commitment Friday to halting inflation, warning that he expects the central bank to continue raising interest rates in a way that will cause some pain to the U.S. economy. In his much anticipated annual policy speech at Jackson Hole, Wyoming, Powell affirmed that the Fed will use our tools forcefully to attack inflation that is still running near its highest levels in more than 40 years. Even with a series of 4 consecutive interest rate increases totaling 2.25 percentage points, Powell said this is no place to stop or pause, even though benchmark rates are probably around an area considered neither stimulative nor restrictive to growth. He says while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses, he said in his prepared remarks. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. So guys, that is a stern message from Jerome Powell, right? He is saying basically, we are gonna raise rates aggressively over the next probably 6 months to 12 months to get this inflation under control. Right now, the Fed funds rate is at 2.25%. If I was a betting man, I would say that they're gonna raise rates until we get to 3.75%, maybe even 4. There's some people out there that think we could go higher than 4. So guys, this is what I'm saying is we've got some rocky waters ahead of us, and it is so important for you guys to stay close to the channel. So again, consider subscribing so you don't miss any videos that I put out every week. And guys, we were 6.28% on interest rate 8 weeks ago. We dropped down to 5.22. On Friday, the stock market, after hearing Powell's news, there was a major sell-off in the stock market. There's a bloodbath on Wall Street, right? The stock market lost over 1,000 points. And just yesterday, on Monday, the bond markets finally reacted to this news and interest rates went up a good bit. And as we sit here today, we are at 5.95%, as you can see right here on the screen. So guys, where do I think we're going to be going with interest rates? I have a very good feeling that we are going to start crossing over 6% and we're going to start getting over closer to 6.5%. I hope I'm wrong. I hope rates come down a little bit. This is very tricky right now with all the economic news that comes out all over the place in the housing market and the economic market. But I think with what was presented on Friday from Jerome Powell, everyone knows that we are going to be aggressive, and I think we should be getting used to a 6.5% interest rate in the next couple of weeks, maybe next couple of months, and I think we're going to be hanging out there for a good period of time. But like I always tell you guys, things can change on a dime, and we just never know what's coming down the road. But I have a pretty good feeling on this one right here. All right, guys, so that's what I got for you today. I appreciate you tuning in. Before I let you go, I want to quickly mention that new construction report in my previous videos that I've talked about. I'm going to put another video on the screen where I go into more detail about that. I am fortunate enough to say and very happy to have gotten 2 of our clients that have been watching my videos into new construction contracts this weekend in Charlotte. Got them both fantastic deals, and it's because they got plugged into that new construction report, got me involved to help them negotiate the best possible deal that I could for them. So if you want my help as well, go ahead and watch this video that's coming up in a minute. Get signed up for that report. I'll get you plugged into it, and then you'll start getting it every single day. And I'd be honored to help you out when the time is right for you as well. So guys, thank you so much for watching my channel. And as always, make it a great day.